running the only publicly traded market Virtu. So appreciate you taking some time with us today.
All right, thank you. It was very much looking forward to our conversation, Rob. Nice to meet you.
Likewise, and we're going to cover a lot of ground here. So I think we'll start off some of the SEC and recognizing that you have an open legal matter with them, so limitations on what you can really say there. We'll start there. We'll talk about market making, what the business entails, and some of the perceptions or misperceptions around that. We'll talk about, of course, the SEC and where you think the SEC or I think the SEC perhaps ought to focus. And then shift gears and talk about your entrepreneurial and leadership journey. And I know, Doug, you can speak at length about any of these topics for a full hour. So I'm going to do my best to keep pace here. I think what started this conversation is there was an article that Charlie Gasparino published in the New York Post. And Gary Gensler is making the SEC into a republic. And then the article goes on, and essentially the allegation is that Chair Gensler may be targeting Virtu because you're a public and outspoken critic of Chair Gensler. Is that an accurate summary? How would you look at that?
Yeah, I mean, I don't want to speak for Charlie, and I don't want to summarize his article. I mean, I read the article. It was a good piece. I like the little graphics part that the New York Post does. I got a lot of favorable and nice comments from friends and people I didn't even know. People contacted my wife and said, keep up the good fight. So I do think that there is an undercurrent, a groundswell of people recognizing what I would call like governmental overreach. And I think this really goes back to like kind of a basic fundamental philosophical difference that Chair Gensler and I have about, and other people have. I mean, it's obviously not an exclusive issue, about the role of government in our lives more broadly, and in this case, the role of a principal financial regulator in the world of finance and investing. If you go back and look at like what is the mandate of the SEC, it's really fundamentally like fair and orderly markets, investor protection, right? Those are the main two prongs. And when Gensler came in April of 21, as I understand it, he assured a lot of the folks on the Senate side that were somewhat trepidatious about him, some because of his background at Goldman, some because of his history at the CFC, and frankly, some because he was the chief financial officer of Hillary Clinton's campaign and actually wrote the check for the Perkins Coie investigation, which became the Steele dossier, right? So he's a guy that has a known political bias, and people were concerned that he was going to apply that in his capacity as, the principal financial regulator of markets. He assured people he's a markets guy. And what we have seen is exactly the opposite. So there was a great article, I'm sure you saw, Ram, in the Wall Street Journal that Professor Hal Scott of Harvard did about all of the SEC proposals and comparing them to the prior chair, the prior administrations, if you will, both Republican and Democrat, right? And the vast preponderance of the proposals that Gensler has put in place are either not supported by legislation or frankly ignoring the procedure under the Administrative Procedures Act as to how rules should be adopted. And so Professor Scott's thesis was, a lot of these are going to end up being overturned. And yeah, I've spoken out very, very passionately on some of the market structure proposals because I think they just represent a fundamental, one, misunderstanding of the markets, and two, a real bias against how markets should work that is informed by the chair's political philosophy, which is very paternalistic, right? It's like the nanny state, if you will, of markets. So I think a lot of the animus towards Robinhood and self-directed trading and the analytics behind their algos and confetti and all that kind of stuff that Gensler talked about is really because I don't think his view of government and his view of how the government should control markets is very, very different than an app where people can self-direct trading.
Right.
I think in his perfect world, we would all be in like mutual funds and there wouldn't be active trading. I really do believe that. And so philosophically, he's got a very different view of how these things should work. And I think that has informed their bias. And that has then percolated down to SEC enforcement and how they have viewed firms like mine and other firms, frankly, that they have attacked. In this specific instance, which, as you mentioned, is now an active litigation, there is a statute, right? Our view, I used to be a practicing lawyer, as you can probably tell. Our view is that we didn't violate the statute. But even assuming for a second that we did, there are penalties enumerated in the statute that we would be obligated to pay, okay? In the same way that if we breached a contract in a civil matter, right, there would be contractual penalties for breaching a contract, right? So the government doesn't just get to pull out of thin air amounts and numbers and say, you owe us this as a fine. That was really my fundamental reaction when we started engaging with them, because they offered to settle this thing. So we could have written a check and settled it, but for an amount that just was not supported by what the statute provided. And so, you're not God, right? The government has rules. They're all laws.
They're subject to rule of law, right?
They're subject to the rule of law. So if you think that we have violated it, we're going to disagree with that, right? We don't think we did anything wrong.
We're seeing that across the space,
right,
especially in digital assets, where over the last 4 years, there's been, well, really 2.5, I would say, there's been this regulation by enforcement.
Yeah.
And what I find remarkable, and former SEC Chair Arthur Levitt and I wrote an op-ed in the Wall Street Journal in October.
I remember.
And we said, look, we haven't had interpretive guidance updated in 4 years. And in the last 4 years, we've seen the rise of NFTs, staking, and DeFi. And, the chair is maintaining this view that there's clarity. And then the courts are time and time again, now 4 times in a row, are saying, no, there's not.
Yeah.
We're repudiating the chair. So I think, and to your earlier point, if you think back to the history of the founding of the American Republic, it was to escape a king that's not subject to the rule of law. That was the rule of a man. And we want to create clear rules for the road that encourage the integrity of capital markets, capital formation, and investor protection, which is a sound mandate. I think to your point, look, people can have different points of views on the values, whether you're paternalistic or not, but exceeding the mandate of the SEC is an issue. And then second, if you're picking political fights because you don't like what someone is saying is in public, that's a concern, because not many people have the resources to stand up and face off with the SEC. That's a difficult position.
Yeah, look, and I don't relish it, right? It is not something I don't come in the morning and say, geez, I really want to get into litigation with my principal regulator, right? I mean, that sucks, right? It's, as a former lawyer, it's not what you want to do. Obviously, we've got the resources to fight it. We're using my old law firm, the head of SEC enforcement, blah, blah, blah. We got great lawyers, and my view is we're going to prevail and we're going to win this thing. But we're going to take a PR hit, and obviously, it probably impacts the stock price. Oh, it sucks. I don't really want to be involved in it. Your point on digital assets is even a better example, okay? And I don't pretend to be an expert around the Howey test. Obviously, I used to be a lawyer. I understand it. I read the article.
You in Bitcoin futures. We'll come back to the Bitcoin ETF.
Yeah, we'll come back to that. But fundamentally, it is, I'll use a strong word, it is really disingenuous for the chair of the SEC to stand up and say, just come on in and register. It's just, you can't, a Form S1 doesn't really work for an ICO. A Form S1 doesn't work for Ethereum. It just doesn't exist.
With decentralization.
And he knows that. He's a very smart guy. He taught digital whatever at MIT, right? So he's extremely well versed in it. And I know that the House Financial Services Committee and Senator XYZ are working on a bipartisan digital assets bill. So we do need clarity, because these things don't perfectly fit in. And ultimately, his main concern is, one, Elizabeth Warren doesn't really like digital assets, so therefore now he doesn't, right? He kind of goes with the political tides. And two, and two, it's a turf fight, right? Like, he knows the CFTC, SEC turf fight very well, which is why House Financial Services and the House Ag Committee have gotten together. I mean, frankly, I think the CFTC has done a much better job, and the chair there has provided some clarity. But to your point, like, then going after, what was the NFT he went after last week? Like Crazy Cats or Drug Cats or Cool Cats or something like that, some NFT I never heard of before in my life, and they paid $1 million fine and gave back $8 million of they didn't have the resources to fight the SEC.
Right.
So they were completely bullied into a settlement. I'm sure. I don't know any of the facts. I'm speculating.
Where did Gensler make the left turn? You worked with the chair, I believe, when he was the head of the CFTC.
Yeah.
And
Yeah,
we
I know
all
I
had
know
high hopes.
Gary for years. I mean, I worked with him at the CFTC, and he was difficult to deal with there. He's a very
And,
smart, opinionated man, but
right. And we all had high hopes, right? Like
yeah,
when he taught MIT blockchain, I said, all
yeah,
right, great. We have someone that can connect the divide between the old world and the new world. And the new world is all to all and decentralized. We have lower trust requirements on your counterparties, and you have more transparency, more liquidity, more efficient execution, which advances the interest of the retail investor. So where do things make a left turn? I think in the Odd Lots podcast, you even referred to Gary as like brilliant, and
yeah,
he has the high intellectual caliber.
yeah,
And is it political? Is it the fact that Warren perhaps is his political sponsor,
yeah,
and these things happen, when you need to get Warren to be, your backer in the primary? Is
yeah.
that where this comes from? I know we're speculating now, but I'm curious what your perspective is.
Yeah, I mean, those are kind of the obvious signals. I mean, I know him from, I worked at Paul Weiss, which was a very like big D Democratic
Top law firm,
connected law firm, right?
right.
I'm a registered Democrat myself, right? So I know his people. Hillary Clinton used to spend days walking through Paul Weiss raising money. I gave Hillary Clinton money. So, I know Gensler, I know Chuck Schumer, I know these cats. I knew him. I know a lot of people that knew him at Goldman and whatnot, and et cetera. So he's not unknown to me and to a lot of people around Virtu. My partner Vinny Viola was working with Gensler back in the 80s and the 90s when he was at Goldman, right? So we know him quite well. Obviously, he got into the world of Washington politics, worked in Treasury, was Clinton's campaign manager in the failed 2016, not campaign, treasurer, excuse me, the 2016 election, and then wanted to get back into politics, spent 4 years at MIT. And I presume what ended up happening was, Warren, who controls, 8, 9, 10 progressive votes on the Senate side, presumably said, listen, I'm not going to support Goldman Gary unless you do the following things. I'm speculating, but I think,
I think part of it's maybe political ambition. There's been
yeah,
allegations that he wants to be Treasury Secretary, and you know
right.
how it is. If you're a New York District Attorney,
Rom, you froze. I don't know if you can hear me. Rom, you are frozen.
obviously he's not the bat towards.
Hey, Rom, you're freezing up a little bit. I can't quite hear you.
I guess connection issue. I
Okay,
think
you're
we're
back.
back.
You are back. You are back. I was.
Sorry there, but it looks like political ambition might be a driver. Is what I was suggesting.
Yeah, I mean, everybody in Washington, right? I mean, I think 99% of the people that go down there have some level of political ambition. And so, yeah, I think if you look at his positions and what he said when he was at MIT, they were much more constructive and middle of the road. And as I said, I think he is a very smart guy. He's a very experienced man. He knows that there is not a registration regime for digital assets today. They have engaged in a pattern of regulation by enforcement. I mean, I think the Coinbase lawsuit is, the prime example of it. And frankly, the Grayscale ETF litigation was almost like a waste of time. I knew they were going to lose that litigation, and they lost 3-0, and two of the judges were Democratic appointees, and they basically said, I mean, this is about as arbitrary and capricious as you can get. So it seems to me we're going to go through this period where there's going to be just litigation after litigation after litigation. A lot of them are going to be in the Fifth Circuit or, in a circuit down in Florida, or, ultimately maybe some will end up in the Supreme Court. They're going to lose and he'll be gone, right? Because he'll be, off to something else after a change of administration, if there's a change of administration. I think that's kind of his MO. He's decided, like, in Washington, if I can come in and get a lot of stuff done, it looks like I'm a doer. A lot of those things are bones that I can throw to the progressive wing of the party, particularly around ESG, some of the anti-private equity stuff, and I think he's just trying to he's going to get credit for trying, right? Like, if
Right.
you actually do anything in Washington, regardless of kind of what it is or where it ends up and where it ends up being litigated, I think people say, oh, look, there's Gary Gensler. He gets a lot of stuff done. Let's pat him on the back. Maybe he could be Treasury Secretary or something else. I think
Do
that's kind of like the impetus.
I think
So
that's a fair base case. I agree. I think more litigation ahead and people are pushing back and they're emboldened by the victories issuing the court system.
yeah,
Um, I guess another question is, do you think Virtu was targeted because your outspoken your outspoken critique? I'll frame it up this way. So, the Gasparino article says like this was a minor books and records violation that Virtu self-reported,
yeah,
and yet the response from the SEC was heavy-handed in terms of the level of enforcement. And you said, "Hey, we're going to challenge this." So, and that would be the basis for the conclusion that this was politically targeting because of your critic. Is
yeah,
that fair?
yeah. I mean, I guess what I would say, I'll try to be as politically correct as I can possibly be, which is a challenge for me. I don't believe in coincidence, right? I don't believe that that's something that is. I mean, I don't think we did anything wrong, and I think ultimately, if you read their complaint, it's actually written like a plaintiff's law firm wrote it. So I was kind of like shocked by some of the language in the press release. It just doesn't strike me as very like a balanced regulator approach. It's more of an advocate. And so we fired back, the best way that we know how, which is to say, you're wrong. No clients were damaged at all. No clients complained. And at the end of the
Where's the
day,
plaintiff?
yeah, there's no like, where's the beef here, right? As it was said famously in the 1988 election. What was that, 84? No, 88. Yeah, George Herbert Walker Bush. Where was it? 92. I can't remember. Anyhow, and so I look at it and I say, okay, well, it's probably not a coincidence that the SEC is reacting this way and that they're acting in a commercially unreasonable manner. Where when I said 10 minutes ago, like, I look at this as a lawyer, right? I was a practicing lawyer for 18 years. I read the statute. I know all the facts. And I look at it and I say, okay, even assuming the plaintiff in this case can prevail, what would the outcome be? It's what I used to do when I was at Paul Weiss, no different. And I know that their settlement demands were many, 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 many multiples of that, right? At the end of the day, this is something that should have been resolved and should never have ended up in this situation. And so he's going to say, well, we're being tough on Wall Street and this and that. And I look at that and I say, you know what? I don't think that that's the case. I think there's a lot more. There's a lot bigger fish out there that could be fried. I think there's a lot of things around investor protection.
Absolutely.
I think
Absolutely.
there's a lot of fraud. I mean, you look at what happened in FTX,
Or FTX,
right? You
Bed Bath
look at,
and
I mean,
Beyond stock. I mean, Bed Bath and Beyond, we all know is going to be worth zero.
yeah,
Investors are going to lose money on that. I
yeah,
haven't checked the market cap, but it was hundreds of millions of dollars in Q1, for instance.
yeah. And it's the kind of thing like if I'm stupidly, I go on Twitter and I tell people like, okay, there's a bankruptcy plan that has been confirmed by a United States
Right.
bankruptcy judge.
Right.
It says that not only is the equity going to get nothing, but like the unsecured creditors are going to be impaired. It's sort of bankruptcy 101 in terms of the waterfall. There is not a scenario in the world where the equity of this company is worth anything. If I do that, then then a bunch of trolls on, I guess, X, formerly Twitter, will say, "Oh, you're a short seller, you're evil, you're going to jail, this." So like, no good deed goes unrewarded. But that's a perfect instance where the regulator, if they were actually paying attention, should file a form, or should they can do this, force the filing of a Form 15 to deregister the security under the
That would
34 Act,
protect investors. That would help
and that
investors.
would protect investors. I mean, there's no conceivable world where Bed Bath and Beyond is worth anything. I mean, it's been liquidated. It
Right.
doesn't.
And I think that's just one, for instance, but even now, this is a good opportunity to kind of shift topics and talk
Yeah,
about your markets more generally. And by the way, when I invited you to speak, again, thank you for the time here.
yeah,
I got so much vitriol and I was just taking
yeah.
a step back around it. And
Yeah, this is the end. By the way, this is the end of your Twitter career. You, for here on, will be known as a shill that I'm paying you, that
by the way,
you
I'm
and
not
I are
wrong.
fast friends. And for the record, we met 5 minutes before this interview. You and
Right.
I have never spoken a human word to each other. Is that
Right.
fair?
That's exactly right. Now, I will
Okay.
say this.
You seem like a lovely man, but yes. And I did check you out. People said you're a decent guy and you wrote a really nice editorial, so I decided to do this.
Thank you. So, you know, I think part of this is the backdrop of, you know,
But
you
don't
have,
let your kids read your Twitter feed because they're going to see really bad things about daddy.
They're 4 years old. They can't read yet. So I got a few years.
Oh, okay.
So it'll get buried somewhere down in the feed of infinity.
Yeah, read my comments. I get some good comments. I don't want to say I laugh about them, but I find some of them amusing.
We'll come back to the FTD one. I thought the hey 1,000 order comment was an interesting book. So framing up that, you know, Michael Lewis wrote this book called Flash Boys. You know, Michael Lewis writes books and they go on to become generally bestseller. He's an incredible storyteller.
Great author. Yeah.
Great speaker. And that drew a lot of regulatory focus.
Yeah.
Meanwhile, if we look at the overall arc of execution in markets, right? If you go back to like the 70s and 80s, even the early 90s, $50, $200, $250 to execute a trade. And there'd be markups. And now, you know, execution is measured in pennies and even sub-pennies, as opposed to the world of eighths and 30 seconds. You know, we've come a long way. And this is an area I spent personally a lot of time. I had a tour of duty in statistical arbitrage. We do market close, dequote order. This is highly technical, right?
Yeah.
So it's a very arcane subject matter that's difficult for people to appreciate and access. And therefore it lends itself to conspiracy theories. Now, as we talk about Wall Street, like Wall Street, there's so many components to it and they're conflicting aspects. You have the old world dealers, like the JP Morgans and the Goldman Sachs of the world, who previously were the king of the hill, and they value opacity. And then you have the new world, which is decentralized, all to all, and thrives on transparency. And a lot of like the business of Citadel and Virtu, as well as your competitors, Two Sigma and Jump and Jane Street, and there's plenty of competition, are, you know, offering liquidity, capturing a bid-ask spread that's tight in a competitive market. And I think that, I don't know what your reactions are to that broad arc of where we are in terms of execution.
Yeah. I mean, you said a lot of things, and the one thing I will disagree with you on is I don't think that the banks, I mean, thrive on opacity necessarily. I mean, I think less efficient markets tend to favor incumbent players. And I think what a lot have was what I see. I'm being a diplomat. This is
your banks are customers too, right? I mean,
they're great customers, and they're our prime brokers, right? So like,
I'll make my point later, but go ahead.
Yeah. No. Anyhow, now look. I mean, I think what has happened in the world of equities, and you're seeing it somewhat now in fixed income as well, Ron, is that I think it is a combination of mostly competition, sprinkled in a nice sampling of technological innovation. And this is going to be painful for me to say, let's give regulation some credit because of Reg NMS and the breaking up, if you will, of the duopoly, or really the monopoly of the New York Stock Exchange. I think if you overlay those three things, but really mostly competition, what has happened in the 15 years that I have been involved in markets, I have seen a narrowing of the bid-offer spread. Obviously, I've seen commission rates come down to zero in retail and pretty dang close to zero and so we have been forced to innovate, to be efficient, to be more competitive. New competitors have come in, some have gone, and that has meant that the JP Morgans and the Goldman Sachs and the Banks Americas of the world have pivoted quite successfully their businesses to other parts of the equities world, right? Where they do prime, they do stock loan, they do this, they do that. They can use their balance sheet to take down big blocks and things that like Virtu can't do. And so, you know, there's room for all these different players. And I do think that the evolution of the markets, particularly in equities, has inured to everybody's benefit, because you recall a time, as I recall, you know, when I was a lawyer, I paid, you know, my wife's uncle Alvy $300, and he was at Morgan Stanley, and like I think he was in Rutherford, like somewhere in Bergen County, and he would call me up and say he liked the stock, and I paid $300 and probably paid like a 25-cent spread. I didn't even look at the confirm, and I bought 100 shares of AT&T or whatever it was. You know, now with one of these things, I've got.
Now we're getting free trading through.
Yeah, now if I don't trade because I run a broker dealer, but if I did, I'd have a Robinhood or a Webull or a E-Trade account, and I'd have more control than Uncle Alvy ever had at Morgan Stanley, right? So the world's evolved, I think, for the good. The one point I wanted to make, and I apologize but you see these periods of time, and Flash Boys is a perfect example where, and Lewis is a fantastic fiction writer.
Yes.
Okay. He doesn't have a clue about how markets worked. And he talked to a young man, Brad Katsuyama, who I found it incredibly ironic, was like a sales trader at RBC getting paid to actually understand the markets. And frankly, Brad didn't like understand how the markets worked. He thought it was like this like black voodoo magic, that there were data centers around New Jersey and that there was like time differences between data centers. That's just like basic market structure and physics. Anybody in the markets kind of knew that. And so he had this notion that, oh, there's all this money going out the door
Well,
from
irony.
from latency arbitrage, and if we put a speed bump in, that's going to solve everything. Well, but you know what? By 2013, 14, when he wrote that stupid book, if there was like a benefit to latency arbitrage, or you could make money from latency arbitrage, it had been arbed out of the
Well,
world
and
through competition.
To put a finer point on me, he was interviewing Sam Bankman-Fried, FTX,
Yeah,
and it was going to be about Sam's journey, and Sam was the hero
I know.
before he became a villain. And it's just an illustration of, these people sell books.
Hey, look, I'm not.
No.
I mean, Katsuyama is nowhere near like. I mean, obviously, Katsuyama is a clean guy, runs a business. The irony of the whole thing was, let me just finish the Flashboy story, is that we were one of IX's first customers, and in 2014, when the Flash Boys books came out, I think we were like 20% of their pool, and we were paying them 200 grand a month because they had make or take, or I think you had to pay like 9 mils each side. We were paying them like 200 grand a month in fees, and so I reached out to Lewis and I said, "Hey, what the f are you talking about? Like, we're a quote unquote HFT, we're one of the evil guys, and like we're their biggest customers, and we make money there. Like, what are you talking about?" And he
Right.
refused to engage me because he wanted to write a narrative, and that led to like the New York State Attorney General Schneiderman, who, by the way, was a criminal and should have gone to jail because he was charged with sexual assault. But anyhow, Schneiderman started sending out subpoenas and like talking about dark pools. I went down to go see them. They didn't have any idea how the market worked. They just like aim, shoot, fire.
The
And
better
then Congress and this and that. And so you had this like whole tumult of this tumultuous period where people were saying, oh, markets are rigged and this and that, like, high frequency trading, spread networks through the mountains in West Virginia, latency arbitrage. It was all just nonsense ultimately.
Right.
And all it did was, I apologize, I swear I'll let you ask a question. All it did was it created more uncertainty in social media. People went crazy. People started to sell against that. IEX raised a lot of money. And ultimately, it cost the industry a lot of money because we all had to look at like dark pools, and dark pools started charging more, and nothing happened. Nothing changed. Nothing at all changed. It was all horseshit.
Well, the other
Ultimately.
part of it is,
And so we're in that same period of time now where people are talking, and Gensler comes in and uses these loaded words. He says dark markets. He calls Virtu and Citadel a duopoly. He says we have an information advantage, right? He's using words of an advocate in the same way that Katsuyama and Lewis did, and it creates this like imagery somehow that these markets are all corrupt and dark and all this kind of stuff. So that's really what
you have that.
that's those kind of backdrops, I think, that really we have a hard time with. I'm sorry, go ahead.
No worries. And plus you have GameStop and AMC in the background, which has more to do with collateral at the DTC. We don't need to unpack that. There's a good Odd Lots interview you had with Tracy Alloway and Joe Weisenthal, and that's been covered ground before. But there was this interesting comment. I'll call it here just to get your perspective on it. And someone said, "Hey, how is it that Virtu can fill an order for 1,000 shares?
Yeah.
If you don't have that inventory, whatever else." I can pull up the exact language. I don't know if you can respond to that.
Yeah, look, that's our job. And that's what market makers do. Okay. There was a regulation, Reg Show, that talks about how we have to borrow and when we have to settle. We get an extra 3 days, so we have to be flat by T5. We comply with the rules, right? The way that the retail market works, let me just try to explain it. And the retail brokers have done a great job, right? The Schwabs, the E-Trades, the Robinhoods, the Webull's, the JP Morgan Wealth Managers. They have all it's a mouse click business. They have all the negotiating leverage. And what they demand from us is service and price improvement. Okay. And I'll explain what price improvement. Service is obvious. They have a choice where they can send their orders. Nobody puts a gun to anybody's head at any of the aforementioned 200 retail brokers, wealth managers, whatever you want to call them, and says, you must send your order to Virtu Citadel. There are 15 national securities exchanges. There are 40 odd, ATSs, and there are 8 or 9 wholesaler market centers, right? So add that up, that's, 55, 60, let's say 65 places where if you're the routing person at any one of these retail brokers, you get a market order, you can send it to any one of those.
Right.
Okay. That's 100% your choice. You have a best execution obligation. Okay. 95% of those firms don't take a rebate or payment for order flow. Okay. So Fidelity, Vanguard, I mean, these are major corporations with billions and billions of dollars of technology budgets, with all the negotiating leverage in the world. They don't need us.
Well, how are they making their routing decision if
They
they're
are making their routing decision, and they have their own best execution obligations based on the best price that they can get for their clients' orders.
So
Okay.
let's define
And
it
what,
through quick terms here. So we have the NBBO, the National Best Bid or Best Offer, which
yeah,
is also known as a consolidated tape, which captures the best bid or best offer at the aforementioned 15
right,
national exchanges. That's one.
right,
And then second, you mentioned the term price improvement, which is a
right. So,
legal obligation to
correct.
do better than the NBBO that you're subject to on pain of enforcement.
On pain of them not sending us any more flow, right? So
Right.
we are tested every day, every hour, every week, every month on the amount of execution quality, EQ, or price improvement where we can better the NBBO with respect to the 10,000 symbols that we need to be two-sided in at any moment in time. Like, sure, we trade a lot of Tesla and Amazon, but we also trade some preferred stocks. So we have to be commercial. We have to be resilient.
Right.
We have to
Otherwise, you
have
lose your business.
certainty.
Right.
Otherwise, they will just turn us off and
Because
route to
and,
some other place. And what they have concluded is, and the exchanges have retail liquidity programs where you can execute at midpoint. ATSs can execute at midpoint, right? Or, within the spread, right? There's innovation in the marketplace. And we are all in favor of giving the exchanges additional tools, like where you can quote it like a half penny as opposed to just execute it like a half penny. We're in favor of all those things to allow competition in the market. What the routing parts of those retail brokers who have infinite resources. They have all the tools. They can buy all the data feeds. They can hire smart people to determine where they get best execution. What they have determined is, in many instances, and you can look at where they send their routing, it's all publicly disclosed. None of this is like,
Rule 605.
yes,
Right.
none of this is, and we were in favor of 605 and 606 reform. What they have determined is that Virtu, Citadel, Susquehanna, Two Sigma, I'm going to forget some names and I apologize to my competitors, Jane Street, Hudson River,
Right.
right? Canaccord is now in the business, right? So the UBS, I'm probably forgetting somebody.
World Quant, maybe.
Yeah, World Quant, right? Thank you, right? Wolverine, right? So there's 7 or 8 or 9 of us that are quote unquote wholesalers, and a lot of them use 3, 4, 5, 6 of us, and they rank us based on the amount of price improvement or execution quality, how much we have improved the
You can
NBBO.
measure. I think the key idea though is that you can measure the value added. That's number one. You can quantify it.
Correct, and that's what they do.
Correct, and that is the commercial enforcement mechanism that these players have, and they have an incentive to deliver value for the client.
Correct, and it's a mouse click business, and it's 100% performance based, and none of it has anything to do with payment for order flow.
So now they also have an incentive to generate revenue. So they might say, look, hey Virtu, hey Citadel, I want you to pay me, and that's payment for order flow. I want a rebate. I want compensation for directing this trade. So it seems to me intuitively that would have to come out of the value that would otherwise be delivered to the retail investor. Is that a fair conclusion?
I don't think that's a fair conclusion. No, I think they look at the overall cost of what they do and conclude that that is a way for them to recapture some of their costs and frankly make profit, right? As opposed to charging more for margin or charging this or charging that. If you look at the execution, and I can give you a specific example, if you look at the execution quality statistics of a firm like a Schwab that takes a rebate, and this is all on their websites, as opposed to one of the big firms that does not take a rebate, the EQ, the execution quality statistics, for Schwab will exceed some of its competitors in certain of the buckets, right? Why is that? It's because they've got better flow, they're more demanding of us for more EQ in particular areas, and they're trying to be responsive to their clients. And ultimately, they're using that rebate to pay for tools and all the other great
So
features.
you're nicer on your customers than I am, but let's shift gears to.
But I think let me just explain the price
Sure,
improvement, size improvement thing, because I think it's
sure.
really, really, really misunderstood. And I'm gonna the
Okay.
200,000
And
share example.
where it comes from, I think, is worth explaining too.
Yeah. So again, this is the industry, the market forces saying the following. So this is the example I gave on CNBC that has completely been transmuted, and people came up with this really funny meme of me as a fairy, which I found kind of amusing. It's not my body. I'm not that fat. I definitely need to lose
I missed
weight,
that.
but
Okay.
yeah. Please don't search for it. It's not
It won't be
flattering.
on the show notes, I guess.
I found it kind of amusing, actually. My kids laughed about it, and I laughed about it, and I sent it around to all my friends. Anyhow, so the way the market works is all of the aforementioned clients, if they send us an order for 1,000 shares in a stock, ABC, whatever it is, okay, what I said on TV is if there are 200 shares on the inside, right, available for sale on all the national security exchanges, which happens a lot, right? Thinly traded stock,
And
people don't
inside
want to
means
quote.
best bid or best
Yeah,
offer.
best bid or best offer. So there's 200 shares. There's 200 shares. Make it easy. There's 5 levels, each a penny, deep, and that's how you would aggregate 1,000 shares. So Schwab has a choice. If it sends that order to the national securities exchanges, it has a router. It can sweep those 5 levels. It would give client a fill, right? VWAP would be 2.5 cents off of the inside, and you'd get a price that is worse than the NBBO because you sent a size that was larger than the NBBO, right? Easy example. I'm not great at math, but you get it. The deal that they've made with us and Citadel and all of our competitors is we are going to send you that order for 1,000 shares. And when you are scored for price improvement, we're going to assume that there was 1,000 shares on the inside and you have to price improve, even though there was only 200 shares.
Mm-hmm.
It's your choice, Virtu. You can act as a riskless principal and you can sweep the book and give us that fill back, but you're going to eat those 2.5 cents. Okay.
So you're
We call
contractually
that
obliged to eat that if you do not price improve.
Correct. That is the understanding, the agreement we have with our clients, and that's how
Tough,
we are
that's a tough
measured.
business to be in.
It's a tough business, and so we
the best bid and best offer in the market.
right.
Otherwise, I eat it.
Right. And what we have, and the current 605 rules don't pick that up. So they only pick up, they assume there's 200 shares. So what we did way back when, it seems like a long period of time ago, when all this mishigas started with Gensler and the SEC, we said, you know what, you don't even know how the service we provide because your rules are so antiquated. They don't pick up that example, and we called that size improvement. We did a white paper. We publicly filed it. We sent it to the SEC, and it was like, they had never seen anything like this before because they didn't have the data. And then my friends at Schwab did that for all brokers and did a white paper, which I highly recommend you read if you haven't read it. And they aggregated what the amount of that size improvement, which is what we called it, is across the industry and how much of that inures to the benefit of retail investors every year. And
Send us the white
it
paper.
was something like 10 billion, 12 billion, or something like that.
What's the key
And so
point is you can measure it. You can quantify
yeah, of course,
it.
it's measurable because at that moment in time, you know what it is. And so that's when I said, on CNBC that we provide infinite liquidity. Of course we don't. We're not printing billions and billions. And then I was going to say the crazies. I'm going to be less pejorative than that. And people that tend to spin things, probably because they're grifters or because they don't understand it, started saying, oh, it's infinite liquidity. There's billions of dollars of synthetic shares out there. And all these companies whose stock has gone down, they're going to magically come up when firms like Virtu have to cover their short positions. And I was like, okay.
Well, let's see.
So anyhow, that's how size and price improvement work. It's an unbelievable service that we provide. It's a really tough business we're in.
It's hard. Yeah.
right?
No
It's
question.
really hard. We have to put a lot of capital at risk. We're providing real liquidity.
I used to be in that
And then,
business, and I got out when I said the margins are too thin.
yeah,
But
and that's why these proposals that Gensler's put forth, when we made these points to his new political staff that he brought in, frankly, I was shocked by the responses. It showed
what,
such a fundamental lack of understanding of how the markets work. The head of trading and markets is an academic.
oh
I'm
yeah, no,
sure
no,
he's a
no, no.
lovely guy. I'm sure he's a lot smarter than I am.
It's
Uh,
mostly lawyers at the SEC.
he's written, well, this guy is an academic from MIT.
Yeah,
He has zero practical understanding of how markets
yeah,
work. He's never traded a share in his life. It's
right.
remarkable to me that these are the people, and Gensler had no experience in equities either. So it's difficult. Anyhow, let's move on. You have some other questions.
Let's shift gears to equities and sorry, fixed income,
Yeah,
and digital assets. And we'll come back. We'll go to
yeah,
leadership. Let me frame it up for you. So, like, I think the fixed income markets are ripe for transparency.
yeah,
I think the lack of transparency, now I think I know, advantages incumbent dealers, some of which
yeah,
are your customers. So if
yeah,
you're a client of, let's say, JP Morgan, and you buy a bond,
yeah,
those private bankers are making a point on the way in, the way
yeah.
out. They're marking up the bond.
Yeah, Fix a great business if you look at like the results of JP, Goldman, all the big banks,
Right.
of
And they're
course.
making good money on that. Another
Yeah,
would be like structured products, the ABS market. If
yeah,
Jefferies takes an ABS deal to the market, they're the sole market maker
right.
of that issue because they
Yep,
know where they can source secondary market liquidity from. And that
correct,
means the bid-ask spread is very wide and you're getting raked if you buy or sell. And that doesn't add market efficiency.
correct.
We need a consolidated tape for these fixed
Yep,
income markets, which are trillions of dollars in size.
yep.
And that's, I believe, where the SEC should focus. And we'll
Yeah,
come
and
back
they
to-
have, and look, I don't, I'm going to give Gensler credit here. I'm like, he has, I don't know if it's an actual proposal. I can't quite remember. He's got so many proposals, my head spins. But there has been a proposal for real centralized clearing of treasuries and a real-time like trace reporting system for all fixed
right.
income securities.
Trace.
There's
Yeah.
obviously some of the incumbent dealers are fighting that because they say, what about blocks? What about
Oh,
this? What about that? Yeah, and
they fought decimalization.
yeah,
We
no, I
fought
get it.
decimalization.
Incumbents tend to look. I mean, that is something that is very much in our interest. We agree with the SEC. We've given Gensler credit where it's deserved. I do think this is a market. He used to be a FIC trader way back when at Goldman, so he gets. I think he traded munis, so he gets like
All
big
to say
markets.
is, I think the point for the public here is that Wall Street's not a monolithic beast. There are disparate interests and factions competing in different areas. So, Virtu
Yeah,
is an investor in EDX alongside Citadel. Let's talk about digital assets now.
yeah.
What's the thesis behind that investment?
Yeah, the thesis behind that investment was pretty straightforward, which is, and it's sort of been proven out by FTX and some of the other like catastrophes around the marketplace, which is to say that, again, one of the benefits of being a market maker is I don't really have to have like,
You don't have a view on
I don't
that.
really have a view about like
Yeah.
the sanctity of Bitcoin or Ethereum or all this kind of stuff. Jamie Dimon goes on TV and says that this is this and this is that, and he's a very smart guy, and listen to him, but it doesn't matter. From my perspective, these are widgets, they're financial assets, and if people want to trade them and there is a need for a liquidity provider, that's our business. We should be in that business. And one thing that is always a challenge is if it's an unregulated marketplace like FX and this and that, who do we do business with, right? We have reputational concerns, we have credit concerns, and obviously we want to make sure we know the rules of the road so that we're being treated fairly. Obviously, digital, that has not been the case, to put it mildly. We were a market maker on FTX. Thankfully, we were smart enough to pull our money back and we didn't lose any
I
money.
didn't know that. So you were a market making spot on FTX or
We were
perps?
market making coins,
Derivatives or yeah.
no coins on FTX,
Interesting.
Bitcoins, and because we were trading futures against FTX and Binance and Coinbase, excuse me, not
Sure.
CoinDesk, and Bullish, and a handful of others. And our conclusion, which Citadel reached around the same time, was that like there really wasn't a solution that institutions like Fidelity and Schwab, who are investors in EDX, could look at and comfortably as fiduciaries and send client flow to. And so that there was a need in the marketplace for an entity that would embrace regulation, would have a custody and clearing solution, which is really, really important, right? Take away that third-party risk, and would have best execution, capabilities that looked and kind of felt and smelt like the equities market, so that if you were the Schwab, Fidelity, and others that are going to be part of this, that are part of this, you could go back to your best execution and ultimately to your clients and say, listen, I got you a price of Bitcoin that was XYZ, and here's what the consolidated tape, put it in quotes, looked like for Bitcoin at that moment in time, because I have an amalgamation of EDX, and this is what the futures market were, and there's competitive market makers, Virtu, Citadel, Jump, others that are in there that are trying to provide that price. And
That's
so,
amazing. Yeah.
like obviously we compete with Citadel. I have unbelievable respect for them. They're a great organization. We do business with them. We bang heads all day, and then try to join forces like we did in the members exchange to try to make markets better
Right.
and provoke,
Competition brings out the best in people.
yeah,
So
and
I guess,
provoke change. And that was the whole impetus behind EDX. Obviously, this uncertainty in Washington has slowed down the business model. It's a shame, frankly, that there has not been regulatory / legislative clarity, because we think that would just grow the whole market. I mean, I've always said, we don't look for opaque markets. We actually want to make markets more efficient and more transparent. Yeah, maybe our slice of the pie shrinks, but it becomes an extra large pie as opposed to a small
well,
pie.
what EDX would solve for, if you had that consolidated tape and transparency, it would directly address the SEC's number one
Yes.
complaint when they reject these ETF applications,
Yes.
which is like this concept of a shared surveillance agreement and having confidence in the pricing.
Yeah.
So that's interesting. What's your thought on whether we get a Bitcoin ETF approved under Chair Gensler this year?
Again, I read the decision. I actually read the Davis Polk memo and the brief, because I used to be a lawyer and I'm a bit of a wonky geek when it comes to good litigation. I was not a litigator, I was a corporate guy. I love the way some of these litigators write. They're so smart. I thought the Davis Polk memo was so good. Not that I'm any seer. I said there's not a chance that the SEC is going to win. And then obviously the brief was compelling, and the decision from the circuit court, which was a 3-0 decision, was such a repudiation of the SEC. It was, you can lose 3-0 and you can lose 3-0. They really got their ass handed to them. So, it seems to me, I don't, he can delay it, I think, for 45 days. I would assume he's kind of instructing people to, like, okay, we got to hold our nose and approve these things, because we really don't have a credible way out that is consistent with what this decision said. In other words, you opened up the hen house, if that's the right analogy, when you approved a futures Bitcoin ETF.
The
There's
horse out
no,
of the barn. Yeah.
yeah, the horse is out of the barn. Thank you. There's no reasonable basis for you not to approve a spot one. And they trade in Canada and in Brazil. And so ultimately, obviously, we're in favor of that. And, I don't think, again, to get back to investor protection, forcing people to trade on unregulated exchanges like FTX, or, buy into like closed end funds where there's going to be a natural like inefficiency. There's a natural desire from people to get exposure to this asset class. So actually having a spot ETF, which has centralized clearing, real-time price discovery, has market makers that are keeping the price in line with like the underlying, that's actually, you're doing the right thing for investors and retail investors, as opposed to the current system where people probably lost money on FTX, even though they probably shouldn't have been trading it because it was offshore, all that kind of stuff. Or they trade the closed-end fund, which trades at like a real
Right. The key idea is
discount.
create transparency, remove counterparty risk, and move to all markets. That's
Yeah,
the
like,
general North
yeah,
Star.
and if this is an example where he could actually like step up, show some leadership, and say, okay, listen, I tried, I lost. Get the industry together. I mean, there's big players,
Yeah.
BlackRock and others, that have filed for a Bitcoin ETF. Like, let's just do this. Do it the right way.
Right.
The APs are all ready to go. We've signed AP agreements with all the big issuers and the
Those
smaller
are
issuers. Great.
authorized purchaser agreements. So you can auction
Yeah.
on the Bitcoin to make
Correct.
liquidity for
Correct.
it.
There's going to be tons of firms that are going to keep the ETF in line. There's going to be a ton of liquidity. It'll be,
Do you think it gets approved this year under Gensler, or do you think he finds a new reason to reject it and you have to wait to a new chair?
so it's, what is it, September 19th? I think it gets approved this year. I don't
Oh
see
wow.
how I don't see how he can delay it. I mean, I don't know enough about the nuances. I'm
I mean,
sure he
you're a
can.
lawyer. I'm not. So he has to have a reason, whether it's capricious or arbitrary is debatable. He has to have a reason he can codify and document. And so you're saying that he'll have to, he could just say, look, I'm going to withdraw the futures application.
Yeah. Yeah, I understand. That would be like, I mean, I get it. He's done some pretty remarkable things. I think that would be like a nuclear, nuclear option.
That's a non-consensus view. I was of the view that he wouldn't approve it.
Okay.
It depends who you ask, actually. I think if
Yeah.
you're in token 2049, they're like, yeah, this gets approved. I asked this question of JP Morgan, Morgan Stanley, and Apollo last week, and they said no. And but, you know, I don't know.
I don't know. Maybe I'm giving him too much credit, but it just seems like, you know, like you put up the good fight. There's, you know, I don't see politically. I guess I shouldn't say that. You know, what's the downside to doing it? Right?
You start off by saying, look, you think politics is motivating a lot of the behavior.
Yeah.
And Elizabeth Warren is one of his sponsors, and she's got this anti-crypto army as like a headline mask.
Yeah, it's
incredible.
Hard
to walk that back. It seems like you're pot committed to that line of messaging. Is my reasoning why he would reject it.
Yeah, that's fair. That's fair. I mean, I guess I'm giving him too much credit. I don't know. I mean, it just seems to me like,
look, I hope it's approved.
It's like irrational behavior. Yeah, I have no idea why Warren is so anti-crypto.
Well, I think they took money from FTX and SBF, and
well, I know. Friedman's mother was Warren's like unofficial tax advisor.
It became toxic. They got to run away in the opposite direction and distance, and unfortunately, digital assets is a casualty of that political, reality.
Yeah, you're going to get me in trouble. I cannot talk about Elizabeth Warren. Andrew told me, because I will say something horribly impertinent, and that'll end up. I'm not a favor. I'm not a fan of hers. Let's put it that way. How's that?
Acknowledged. So let's move past that. Let's talk about, if we can, briefly around AI. AI is transforming the world. Of course, there's a sub case of that called machine learning. Knight Capital Group pioneered electronification of markets using machine learning. Does AI change your business model at all? Is there a need for an LLM? I mean, you don't need a view, so you don't need to do real-time sentiment or earnings transcript processing. You're in the quotation business. But how do you think about what AI means for marketing Wall Street?
Yeah, I would say at this moment in time, I don't see a role for AI in market making trading decisions being made. I see, well, let's put it this way, like, sure, we use machine learning techniques in our algos because you have to, right, in order to be competitive. It's a very dynamic marketplace. It's one of the things we offer our institutional clients, are these, algorithms that can respond to, like, okay, there's liquidity here, we should go grab it because it's a liquidity seeking algorithm, things like that are, so you have smart algos that like are responsive to the world and use machine learning techniques. The idea that, like, we have over 900 employees of this firm, that the idea that a lot of them are traders and quants and things like that. The idea that we're going to eliminate the vast preponderance of them because we're going to have I don't.
Business, right?
I'm not going to. I'm not smart enough to say that whether that's going to be the case in the future. But I think based on what I see right now, I think there are definitely like some. We run very large scale code bases, right? So is there some advantage to, like, using? It's a little bit like I'll give you the analogy. I was a corporate lawyer for 18 years at Paul Westry, Wharton and Garrison. I did everything, but I spent a lot of it, being an M&A lawyer, mergers and acquisitions lawyer. And so there would be not only a merger agreement, but there would be all these ancillary agreements. And I'm a dinosaur. So back in the 90s, it was like, you had to pull a precedent off a shelf, and like, then you would have a secretary like scan it, and then you'd make all these changes and all this kind of stuff. I would imagine now, not that I know this, in 2023, there's an associate at Paul Weiss who's been practicing law 3 years that frankly can do in an hour with what took me like weeks and weeks of work to do. So I see that there's certainly a lot of what we do in our code base is demonstrably repetitive and, like, is prone to automation, if you will. And so I think I see advantages to that in terms of scale and automation. In terms of like replacing the kind of human side, which is manifest in an algorithm, do I see AI replacing that in the near to medium term? I think the answer is probably no.
Got it. And I had a specific kind of technical question. Then I'd love to shift gears to your journey and your story building Virtu. But like thinking back to, let's say, NVIDIA, you make a market in thousands of names, futures, options.
Yeah, about 25,000 financial instruments are
Tons of
called.
names, right?
So a lot in
Right.
50
And so like,
countries and 250 markets around the world. So it's a lot
it's
more than just US retail, but
right.
everybody
It's a
likes to
big,
focus on that. Yeah.
big
Big.
global business.
That's
So
what I've
let's
been
say
told. Yeah.
NVIDIA, they beat earnings in May. The stock gaps up at the open. What I always find is that it jumps to a new level. You really don't see price discovery between the current level and the new level. And presumably Virtu and the Citadels of the world are making that market. Can you comment like just on the technicals of the market, like how that jump works? And obviously my thesis is that, look, if you're providing liquidity, you've got to stand ready to provide bid offer on every security.
Yeah.
You don't have
Yeah.
a view, so you got to provide that. Now, if you see a ton of market orders coming your way, then one way is find an auction, right? You have the opening market auction. Obviously, that's one mechanism.
Yeah.
Another would be to say, okay, well, how do I set price to compensate from being run over by a train?
You're talking after 9:30 when the stock's already open?
I guess like the gap in the aftermarket, after announced earnings, where there's
Yeah.
a jump in the new level. Like, there's no price discovery along the way. By definition, the market's closed for a bit. I'm curious if you could just like explain how that.
Yeah, well, frankly, the market's never closed, right? So it's operating until 8 o'clock, and frankly,
Around the world somewhere.
yeah, around the world somewhere, and balancing supply and demand is kind of price discovery, and it's a little bit like what we do. And obviously, we've invested a lot of money in what we pay for all the market data feeds from all the national securities exchanges. We've invested a lot of money, as have dozens and dozens of other firms, homogenizing those into what our view of the NBBO is, which is different than necessarily what the SIP is, but obviously we harmonize that. We have over the years been able to understand, the quality of some of the data feeds as compared to others, right? Some of it is technological, some of it is latency. It's not, I wouldn't say there's any magic to it. It's really the blocking and tackling of market structure and building a technological infrastructure that can handle these fire hoses of information that sometimes are a trickle and sometimes are a burst. Are we perfect around bursts? No. I've said to people, the worst kind of chart, and I'm not going to speak about NVIDIA because I don't remember what happened on that day, because I barely remember what
There's a
happened
big
this
gap
morning.
up after
Yeah,
the
no, I remember that. Yeah.
raise.
But the worst thing can happen to a market maker are these sudden price movements, right? Because it's a little bit serendipity. Like, we're never going to be perfectly balanced, right? So we long and short at that moment. Obviously, if we were short at that moment in time, we're going to lose money. And we try to, like, if there's a known announcement, obviously we try to hedge or reduce our position so that we don't get caught one way or the other. And there's often times where there'll be like, I'll look at our trading GUI and I'll see like, dang, we lost $100,000 in some pharma name or some technology company I never heard of, and there's a conference going on, and or there was an FDA news announcement in the middle of the day, or someone screwed up their Edgar filing and they issue earnings at like 3:15. That's the worst possible thing for a market maker,
Idiosyncratic shocks.
because we can't shut off, right? Like, I can't call up Schwab and say, we're good for today, right? Actually, that's what the auction proposal ironically would allow us to do, is to basically,
right. Well, that's Chair Gensler's proposal to revamp an auction. Just
yeah. If it went to the, we would effectively be an agent, and we'd say we're out. We're going to route it to the, and people would get worse executions. So I guess the long-winded answer is there's no magic elixir that we have to deal with that.
It's nuts and bolts blocking.
It's nuts and bolts blocking and tackling. We're trying to provide as much supply and demand as we can. We're active, in a lot of names now, 24/5. Where the Robinhood, and I think Schwab does or TD Ameritrade, but now Schwab does 24-hour trading. And I don't know how many symbols it is. It's 50, 60 names, mostly ETFs. We're one of the firms that provides liquidity in doing that, and there's risk associated with that.
So let's shift gears about your story and Vinny's story. So Vinny was trading, in the pits in a bygone era, seemingly now in this world of decentralized safety. You were a lawyer. Lawyer to CEO transitions are extraordinarily rare. You don't really see that.
Yep.
Tell us about like, that journey, that story, and
Yeah, I mean, yeah, the etymology or the foundation of Virtu is really Vinny's story. I mean, he was, as you say, one of the pioneers in the no pun intended, because that was the name of his company, in the energy pits of the New York Mercantile Exchange. Started in the crude pit, natural gas, gasoline, gas oil, making prices between them with funny hand signals. I can't do them. Vinny does them for me occasionally. You'd go like this if you wanted two lots, that kind of stuff, screaming and yelling. And that's how trading and price discovery was handled in the 80s, the 90s, and even into the 2000s. Vinny realized at some moment in time in the late 90s that was not going to be the end state of financial intermediation, that technology and automation and some of the rules that we talked about before were going to change very much how futures and equities and options and everything else was going to be traded around the world. So he had this idea. The man is an absolute genius, visionary. I'm blessed that I met him. That if we created a fully scaled automated firm that was agnostic as to the direction of markets, that really understood the plumbing, micro market structure, and invested in technology, that we could potentially try to be the best bid and the best offer in all these different objects and all these different asset classes 24 hours a day around the world. But it would take scale and automation to do that. So that was his vision for Virtu. I came into the scene after he had already started a company called Madison Tyler. He needed a lawyer for something, and through a mutual friend, he got to know me. I had been the lawyer when General Atlantic invested in the New York Mercantile Exchange, and Vinny was on the other side of the table. So there's a lesson in life. Don't be a schmuck when you're negotiating with people. I was a decent lawyer, and I handled myself professionally, thankfully. And Vinny said, "Who was that guy?" Blah, blah, blah. And here I am. So he met me. I was his lawyer. I was in the trenches with him. He had some thorny legal issues around the Revco bankruptcy. They owed him money, and that was a tough situation. It wasn't his doing, obviously. He was a creditor. And, I got to know him real well. We got along well. And at some point in 2007, he says, "I want to recreate what I started on the West Coast." And he described what I just described to you was Virtu. I said, "Vinny, I don't have any idea what you are talking about. I'm a corporate lawyer. I know M&A. I know the securities market. I don't know a bid from an offer. I don't know EBS from
he
a
made
hole
a
in the
bet
wall."
on talent and intelligence.
Yeah, so he said, "Listen, I can teach you that. You're a smart guy. You'll figure things out. You got a crazy brain that's very peripatetic, and you're all over the place, and you like to read and all this kind of stuff. You'll figure it out." And so I said, "Okay." So I gave up tenure at a great law firm and joined. There was, the two of us and a young partner, and we were started here in New York, and the
And you
rest
created that
the rest is
immediately in the
history.
wake of Reg NMS. I think it was 2007. So
2007, yeah.
you saw the change in regulation, which of course happens across industries, and you went after that.
I'd like to say I was that smart. I was just like, wow, I really like this guy. He's really been successful. I'd been a lawyer at that point for 17 years, like doing, the same large M&A deals and all this other stuff. And I wanted to try something different. I was 42, and I said, all right. I talked to my wife, Vinny, and my
I
wife
think
hit it
David
off.
Rubenstein started Carlisle when he was 42 or 43. By the way, I think I'm 44. So
Yeah, there you go.
good age cohort.
You look pretty good. Yeah, I've aged a lot in the
All
last
right.
year. Yeah, my hair's fallen out a little bit, as my
Well,
friends on
when
Twitter
you're
point out.
publicly traded, you age in like 2x time.
Nah, no, look, I'm the most blessed guy in the world. I love what I do. It's not a job. Vinny's been an amazing partner. We get along great.
What were those early days like? I mean, now the infrastructure, CapEx, cost setup is
Yeah.
hundreds of millions of dollars.
Here's what I would say. The best entrepreneurial advice I can give is, and Vinny really was a genius about this, was I wrote checks with him pro rata. He owned a lot more of the company than I did, but I wrote checks pro rata. When you were a guy who spent your entire life, money's coming this way, and all of a sudden money's going that way, right? We were a startup. I was paying payroll every 2 weeks. I was like president, general counsel, CFO, and chief bottle washer, right? Literally, I remember trying to install the dishwasher in our office on Madison Avenue. I'm a half-ass plumber. Chris Kincannon actually worked for us and used to be a plumber, and Chris actually showed me how to do it. We were putting desks together, so it was like, literally like, yeah, we weren't like three guys in a garage, but we were pretty well funded. But what I learned was, when you write checks and you have to count every penny, and Vinny had me reconcile the P&L, like I learned the operations of this firm from the literally from the ground up, cold. So like I am maniacal about costs in this firm. Like just today I was going through some of our like cash accounts, and I said, all right, we can get a higher interest rate in Canada on some of our cash balances, and like, yeah, and it turns out I was right. So we're going to make another whatever, that kind of thing. So like I focus on minutia in a way that like I think other CEOs don't, that are kind of more managerial type CEOs, because I don't consider myself a CEO. I'm the co-founder of this place. It's my firm, and Vinny's firm. Yeah, we're public, but every penny I think I treat as my own, and I
For
treat it with,
ownership
yeah,
mindset.
it's really, really important. It's really, really important. And I think that is the culture of the firm. We try to pay our people well, but don't do lavish things. Even this office, which looks nice because I'm overlooking New Jersey and I'm on a high floor here in Midtown Manhattan. It's it's a great sublet that we got from, I'm not going to tell you who because they're a client, but
What were the unlocks in the growth trajectory of Virtu?
yeah, it was interesting. Like when we first started, like we kind of got ready for a year. I remember it was like June something 2009. I can't remember the exact date. I should remember the exact date. Anyhow, and we're going to go trade, and we all got in it because the equity markets open up at like 4 a.m. and we had spent literally millions of dollars, right? I had spent a lot of money. My wife was probably a little panicked. She won't admit it.
So your savings from a law firm, you're pouring into this business to grow.
Correct. Millions of dollars I put in. And the first day of trading, all of our like simulations showed her we're going to make all this money. All these people in a room were spending, I don't remember what our run rate was, but it was, not cheap. And we had bought all this gear and blah, blah, blah. We turned on the machines and like, I think our net trading P&L the first day was either $23,000 or $27,000. And I was like, oh boy, this is a slog, right? That was not covering the nut. And I was making a lot more, at Paul Weiss. And Vinny turned to me and he said, listen, this will happen. It's going to happen in step functions. The first day you make $100,000, you'll be like, oh my God. Then you're going to make two. And then the first day you
A
make
lot of foresight.
Yeah, he had just done this before, right? And so it was the patience. Like nothing happens. You don't like turn a screw in this business and all of a sudden like, the water
So
comes on.
it was just funded between you and Vinny. Do you have any outside money?
No, no outside money.
Wow.
Yeah,
And when you
I
said
mean, Vinny was a pretty successful guy. So like, and
I
he,
mean, he's well-known legend in his
yeah,
own right.
yeah. So obviously, like, some of the prime brokers did business with us because Vinny had a big balance sheet, and frankly, he personally guaranteed some of our early
Right. And
obligations to primes. And so, like, I give him
personal
all the credit in the
guarantee.
world. This guy has, can you say balls? I mean, this guy has a very large set of
You can
balls.
say
He's an
balls.
amazing entrepreneur. He's a great guy, and
And when you said he had done it before, what are you referring to? Because Virtu is one of the first to.
yeah, he had a predecessor company called Madison Tyler, and back at the NYMEX, he ran a business called Pioneer, which was like more of like
Got it. Oh, so okay. So when was the moment
he had run trading groups and trading firms before. He had never built a firm of this scale, and I think that's one of the reasons he was attracted to me, because I was more comfortable doing this, talking to regulators, other than obviously, Gensler. I
Right.
felt
You had a
comfortable talking to him. Yeah, I knew legal things. We went international. Then in 2011, we wanted to make an acquisition. We took private equity money. We had to go to the rating agencies. We were the first quote unquote HFT to go to the rating agencies and raise money. We raised $300 million, which was like unbelievably painful and hard. Last January, we raised $1.8 billion. And I think we did one phone call because we're now a seasoned issuer. So like we took like a business and in part helped institutionalize this as a credible, respected function in the market. I would hope that some of our competitors, although having witnessed our journey, they may not want to do this. I'm hopeful that some of our competitors
It's hard. I mean, like
will want to go public as well. I think
the
it would be good
scrutiny dials
yeah,
down
it's
quarterly earnings, and it's
yeah. It's not. Look, there are some days where I'm like, ugh, this is this part sucks of the job. But
when did you say, "Oh wow, we got this," and you can go to your wife and say, "You know what? The decision was worth it."
Yeah, it's a great point. I would say probably the one day I really remember was, I think it was August 4th, 2011. Check me on that. It was the day
4 years later, 4 years after the beginning.
Yeah, it was the day the S&P downgraded the United States,
that was
which
August,
was August 4th, I think it was. And I remember that day because it was like a shocking development, and the firm was just humming. I don't remember how much money we made that day. It was in the millions.
Because volatility went up.
Volatility went crazy. Bid offer was this. It was just insanity. And I was on the trade floor the whole day, and I remember didn't look up. For me, probably didn't even eat lunch till 1, which is like forever for me. And at the end of the day, we had made a decent, good amount of money, and the firm just had performed. And I was so proud of what we did.
The
And we
machine
did
was
all these
working.
ETF creations, redemptions, but people were running around. It was just working, man.
Right.
And I was like, wow, we are a cog in this ecosystem of the financial markets. We provide real value, and it's working really well. And then the firm just scaled from there. And the rest is,
Right.
we went
More
public at
products,
night
more
and ITG,
markets.
yeah, more park, yeah. And then the idea was to scale it into a broader financial services firm, which is what we have done.
How did you all do during the flash crash? I think that was 2011 as well,
That was
right?
2010, I think.
2010. Plus or
I
minus
think
a
it was
year.
April 2010. We did fine. We made money. I mean, like a lot of people, like, on that initial rip, we lost a bunch of money, but then when it bounced back, we made money. So we have a lot of like risk controls around like bad pricing. And so the algos, the non-customer ones will like shut off when they
Well, it's
see
hard
penny.
because when your P&L goes in one bad direction, and
Yeah,
if you exit that, you miss the bounce back. So
correct.
it's a funny.
I have learned over 15 years that like you gotta look, obviously we have a lot of safeguards and risk controls and things like
Sure,
that. But a lot of times you just have to sort of trust in the system that you've built and the risk controls and whatnot. So
it takes a stoicism to do it.
yeah,
So got it. So now you realize you've got a business, it's working, you're growing, you want to do more,
yeah,
and you've got to hire executives around you as well. You've got to trust them, delegate to them, and I think one of the most important decisions for any operator is the ability to hire talent, assess, suss out, identify talent. How do you think about that, both in terms of the qualities you look for, as well as even like your approach
yeah,
to interviewing talent and selecting?
yeah, yeah. I mean, we've grown this firm mostly organically. So like, one of our co-presidents, Brett Fairclough, who's awesome, was literally like I can't remember exactly what, maybe like a compliance person at Madison Tyler, the firm we bought in 2011. He had started right out of school, and he was like all of like 27. And now he did compliance and recruiting. And now he's like one of our co-presidents, and he kind of grew up at Virtu. I sent him out to Asia, did an amazing job. So like, I'm a big believer in like, in the early days, I interviewed everybody, and I had people give them like, probability tests and things like that, and make sure that they
You
were,
tested for intelligence using like brain
yeah,
teaser.
test, all that stuff. But then it was always like a cultural fit, because I mean, obviously I want people that were, smarter than me, right? So I took the probability test. I had a number, and if
You gave them
people
a test that you couldn't
already,
pass. You want to make sure they could pass.
yeah, it's really, the culture here is really, really important. Like, that's why we always hire and try to promote from within. And so obviously everyone says this, we have like, I'll say a no asshole policy, but it's different. It's more like we try really, really hard to be egoless. It may sound like like I have a big ego around these things. I try really, really hard not to do that. Like, I walk around the trade floor. Literally today, there was a young man getting ready to be interviewed. I walked in because I was just kind of like, yeah, why not? And I met the young man. He was a junior at Harvard, and I introduced myself, and I said, "Oh, I'm Doug from sales." He didn't know who I was, which was great. And we had like a 20-minute conversation. And then the next person who was coming to interview said, "Oh," and introduced me. And so like, but it was great to meet that person, and we're going to give him an offer because I thought he was awesome, and had a really good kind of vibe about him and whatnot. So that's like, to me, like the most important way and the best way that you can identify talent. So like, I'll make up a number. Probably 80% of our employees are kind of homegrown and never worked at another firm, and that's how we like it.
Because you train them up on the culture, your
Yeah,
expectations, how to work
yeah,
together.
yeah. We get a lot of referrals, like friends.
So you're recruiting
Um,
right from undergrad then, if you want to have that
oh
model.
yeah, yeah. A lot of undergrad. I mean, we have a lot of physicists who have PhDs that wanted to do something practical and this and that. But yeah, no, it's a
It
lot
takes
of,
time. You have to build a brand to be able to attract
yeah.
that talent.
We have a really good internship program. We have a winternship for young ladies that are like sophomores that hadn't never been exposed to. I'm a believer in trying to make the firm as gender balanced as possible. I think that's just frankly selfish, because I think there are some really great women out there that
A
otherwise
lot of
wouldn't get it. They
a
wouldn't
lot
get
of
into finance. And so
absolutely.
we've had our first interns who've become interns that are now full-time employees. So I'm really proud of that. So we put a lot of effort into that, of having like a good hands-on program where they get like real work experience as well. So I think that's a really important way to, um, grow a business. I mean, a lot of firms are kind of mercenaries. The other thing I'll say, which is really, really important, is there is not a trading culture at Virtu. So nobody has like a designated P&L. There's no groups. There's no desks. Some firms, you get 42% of this, you get 17% of that, and groups fight with each other, and there's pods and all that kind of that mishigas. It's like we are one team, one dream. Like there's one P&L daily. People see it. At the end of the day, it's reported like 9, 10 o'clock at night. We have desks that like transfer books around the world. So Singapore hands off to Dublin, that hands off to Austin, New York, and just kind of strategies just like circumnavigate the world like that. It's the ethos of Virtu is very, very different than a lot of firms, and frankly, a lot of our competitive firms. That doesn't make them worse or better or this or that. There's plenty of mercenary firms. There's plenty of firms where groups go and they make 27% of their P&L. It's just a shared success, highly collaborative kind of environment.
How do you lead? Like, what would you describe like your leadership framework?
I try to make it as flat as possible. I have no idea how many direct reports I have. That's just kind of like a made up concept. I tell everybody that they work for us. I'm saying hello.
It's like a meritocracy of ideas.
Yeah, total meritocracy. I want, everybody I hire, I say, I want your ambition to be, if you want to do this, that you can be CEO of the firm.
Got it. We'll wrap up in 1 or 2 minutes here.
Yep.
Perfect. You're a big investor in the Florida Panthers. We're seeing headlines around people investing in sports teams. I think NHL franchises are up 1,000%. Personally, I think they're probably overvalued. You're seeing Michael Jordan exit his sports franchise. He's probably
hey, what are you saying? Yeah.
So the question for you is like, what's your thesis on the Panthers? Is it a capital appreciation bet? Are you enjoying the consumption of that, or how do you think about that?
Again, it was one of these things. Vinny and I were at a Ranger game. I don't know. I'll make this up. I mean, we got to a lot of sporting events, he and I, because we're good pals. And we'd always talked about like, hey, we have a good leadership environment. Like we run things kind of our way, data analytics, all blah, blah, blah. And we're like, wouldn't it be cool to, Vinny had previously been a minority investor in the New Jersey, now Brooklyn Nets. So he had more experience. And I said, well, hockey's, and I, in my prior life, I'd been a little bit of a sports lawyer. I'd represented Major League Baseball and Major League Soccer. So I knew how the leagues worked and how their models worked and their collective bargaining agreements and revenue sharing and all that kind of stuff. I'm a little bit of a wonk around sports. I kind of enjoy that. And I knew a little bit about that. So I said, well, here's why hockey to me is the best investment. Selfishly, I had a home in Florida. I had been to Florida Panther games. I wasn't living there kind of full time. I just took my kids down. I like to play golf, and my kid was a big Devils fan, and so we'd go watch Devils Panthers at the arena. It was a great arena, great vibe, and I said, there's this team, Florida Panthers, and as fate would have it, the then owner of the Panthers kind of had to like dispose of the team for some personal reasons, and Vinny had just gone to see Bettman, and kind of one thing led to another, and here we are. So it was a combination of like two guys' dreams, a little bit of ego, a little bit of like, hey, this will be kind of fun. And I would say the first 4, 5, 6 years was a slog. It was a franchise in kind of disarray on and off the ice. We worked really hard and tried to virtuize it. The leadership team we have down there, a gentleman by the name of Matt Caldwell, who's a West Point Army Ranger, is beyond first rate. His ethos is incredible. So now I'm involved as much as I want to be. I give Matt a lot of leadership advice. I go down and I watch games. We lost in the Stanley Cup Finals last year, which was disappointing, but also like exhilarating, right? We won the Eastern Conference, kind of shocked people, beat Boston, Toronto, and then Carolina. And so it's been, it's a dream of a lifetime, and I'm blessed that Vinny enabled me to participate in it. He's the controlling owner. I'm just his sidekick, but I'm involved in it, and I love it. It's right. Just fun, and it's a good ethos, and there's great people down there. When we beat Carolina, people kind of know who I am, I guess, because I'm around there a bunch and whatever. And grown men were coming up to me and crying and thanking me. It was literally like, wow. My kids were with me and my wife, and I was just like, and I said to my children, I said, do you understand like the power of sport? Like how it like energizes and unites a community? Like Broward County, like there are people at this game that will talk about this game for 30 years, right? And we had a small part in building that, and that's like incredibly rewarding and satisfying. So there are so many fans down there that I have befriended over the years, that I talk to, that I've given seats to, that I've hung out with. Like, I just like being part of the experience. It is before game 3 of the finals, which we won, I got there really early with my wife and my kids, and I just like looked around, and there's Wayne Gretzky, and there's this guy, and there's that guy, and I'm walking around because the doors hadn't opened yet, and I said to myself, I am like, a kid from like Long Island who grew up with my grandparents came here from Italy, literally were illiterate. And here I am sitting in this arena, like, what the F just happened? Like, what a great, great country this is.
Absolutely.
So
Absolutely the case.
anyhow, that's my vibe on sport.
One last question and we'll
Yeah.
wrap up. Just, on Virtu stock, I spent some time this morning on it, haven't looked closely. The price to earnings ratio is like 7 or 8. It's got a dividend yield of 5%.
Yeah.
Really competitive market, but the barriers to entry to get in are steep unless you got a couple $100 million to shell out and build infrastructure.
Probably more than that, but yeah.
What is the market not understanding about Virtu? And obviously, the only publicly traded market maker. So anyone who wants to own an HFT business, you can go buy one online.
Yeah, I mean, look, I bought 50,000 shares last week, and scale is really a big barrier to like lasting success. There's been very few new entrants, if any, in the last 10 years that I can think of. But look, in fairness to the universe, it's a hard business to kind of model and to predict. Right. So I think people like businesses that have like growth trajectories. People, they like the exchanges because it's like volume times rate per contract equals like P&L.
The drivers are easy to discern in other.
Yeah. Like, the retail market making business, is challenging. Like, there can be days where there's volume and we make no money. There can be other days where there's a little less volume and the bid offer happens to be wider and we make more money. So like, I can't sit here every day and say, I'm going to come in and we're going to make X dollars or Y dollars. And so the street can't do that. So I think over the years, we've surprised to the high, we've surprised to the low in quarters. And I think that has been reflected in the stock price. Well, what I tell people is, look, I'm a long-term investor holder. I founded this firm. And I think you have to look at Virtu over a long period of time. The thesis is electronification of markets, efficiency. You talked about fixed income. You talked about digital assets. You talked about like a proxy for volatility. So you're getting effectively paid, a coupon to be long the VIX. But if you're going to try to like look at this company quarter by quarter or day by day, it's going to like surprise you and it's going to disappoint you. So it's become a little bit of a trading stock, right? Which is great. People trade in and out, but I look at it long term. So, Vinny and I are believers in the stock. We have a stock repurchase program in place.
I think we bought $1 billion.
We've bought back, 15, 16, 17% of the float, something like that. We've maintained our dividend. We have said publicly we're going to continue to be good stewards of investor capital and buy back stock and pay our dividend. So I'm very zen about it. I'm 58 years old. I just signed another 5-year contract that goes through, I don't even remember, 2028, I think, something like that. Yeah. And so I'm going to keep just blocking and tackling and doing what we do. And we're going to wake up in one day and I hope the stock price will be significantly higher. But at the end of the day, the validation I get is from the employees here and people feeling really good about what we do. And I get that every day. I mean, this whole SEC, the situation really has unified the firm. If you could see like some of the messages I got from people in the US and outside the US, I probably shouldn't say what they said, but you could suffice to say they were very, very supportive and
I can imagine what they
behind
said.
us. Yeah, I mean, I think people that are in the firm really know what we're like, right? And that complaint that was filed in no way, shape, or form represents what this firm is all about. And people that work here understand that. And you know what? We're going to work really hard every day the way we do. We're going to continue to add value and make our clients and customers happy. And at the end of the day, in 3 years or 2 years when Gensler's gone, we'll be here. In 5 years when someone new comes in, we'll be here. 15 years, I've seen all different shapes and sizes of regulators come and go. They've pounded the table about this, that, or the other thing. But at the end of the day, the most efficient market maker is still needed by the markets and will always be needed by the markets. The notion that natural buyers and sellers will somehow come together is just fundamentally flawed. So our business model is here and sustainable for the long haul, and that's how we run the firm, with a long-term focus.
Perfect. Well, thank you so much, Doug, for your time. I
I
appreciate
really
it.
appreciate it.
Very much.
Thank you. All right.
All right.
Be well.
Be well, you too.